Hello guys, glad to have you on board again. Today we're going to do a quick recap of what's been happening recently on the Ethereum because there's something I wanted to have a look at. So first of all, we got overbought cluster right into the trend channel, but the thing is that we broke that trend channel in the same time. So this is still a mixed feeling I do have, suggesting that we need to digest this overbought cluster and just waiting for a bit. As I said, standing on this, as long as we haven't been proven wrong, I'll stick with the range structure. All I want is not to break down the mid area of that range. We shouldn't go back there. Okay, if we had two bottoms, I would be concerned about the fact that we'll do just an ABC flat correction. We've been building a pretty high low, suggesting in here we should have a higher high and way higher high than that if we want to do an ABC correction. So if we were just doing first impulsion, this and this, just to make new lows afterwards, could be possible once again, but this is not the area we should have been rejecting. We should have tried in here. You see, you've got two areas of low volume. We should have broken the first one to trap and failed on the second one. If we had done that, I would have been a lot more concerned about this actual move. I'm not, so for now I'm just forecasting that yes, we've been overbought. Some people might have got overexcited. We just fucked them and reversed just to gather some steam again, to try it out again on the next few days, but with a better odd to do it better the next time. So what I also care about is the time we've been spending out there. So I really wanted to have a look at this. Is going in there. We're going to do Bitcoin just afterwards. Okay, but if you have a look at this in a 1 hour chart time frame, it basically made 1, 2, 3, 4, 5, 6, 7, 8 hours. The eighth hours I've managed to close lower, but basically another one did. So we had pretty much 6 hours closing on top of the previous resistance. So it's not like we just worked it out, made a spike, upper shadow candle, didn't manage to hold, breaking the previous highs, and then reversing brutally. And the worst case would have been to try it out, not managing, meaning just a market making spike, usual stuff. We just go there, we take down stop loss, no one's buying, so we just trigger the stop loss, fail, and then futures market reopens and sell. If we had that, I would have risen my concern. But in here, I would say no. Okay, it's not no big concern. We've managed to hold there for 6 hours, and 6 hours have been closing on top of the resistance, so it's kind of great. It means that those price kind of meant something for at least 6 hours, and that was during the Asian session. That was the one that matters the most in terms of cryptocurrencies. And I would say that's kind of positive, even though we're pulling back to context in a straight line. It doesn't mean we're bearish. All I can say is that we need to have this to build a range structure. So far, this isn't close to anything we can work with. So we've got two options in here, as I said. Either we push back to the trend channel on the lower area or in here. If we do here, means okay, we can validate this to be an intermediate low point. Or if we go there, we're going to search for a lower intermediate low point until we manage to push back the trend. So for now, we're bullish context trending, and we're just trying to pull back in here. It's pretty ugly kind of pullback. Yes, I kind of feel that as well. It's not the usual type of trading activity, but God knows, I mean, have you ever seen the cryptocurrencies being usually trading? They're the opposite of it. The kind of spiking trading or anything like that, I mean, that's not usual. So I kind of get used to this. So all I say is that, yes, this is nothing I really matter to me, nothing I really care about, because it doesn't feel like it really worth the efforts of just analyzing this. All I can tell is this is just pure range activity for the dumbs to talk once again. So I'll just let it go until I got a more mature range. So I need 3 validated boundaries. Eventually we've made one in here without signal because it's been a little bit too brutal. So we could eventually just go lower to trigger another signal. Remember that range signal must be prices breaking outside of context channel, triggering a signal and a blue triangle. So we could go lower. It wouldn't necessarily be the big of a deal. All I'm caring, as I said, is for us to build a low, then build a high, and God knows where the fuck it could be. Could be there. God damn it, TradingView. Please do something with those or there, okay, or whatever. I mean, this is really, you do it wherever you want. I don't give a shit. All I care is for us to do 3 swings, okay? And when we'll have done 3 swings, or at least 2 of them, I'll be able to forecast the range, at least to have some decent odds to identify the range structures. I'll wait for the majority of that range, and then I think we're just going to keep on trending again, but we're first going to have to range a bit. So that's it. I'm gonna have a quick look at what happened with the Bitcoins instead. So in here we didn't manage to break the high, so it's probably Bitcoin that's been blocking Ethereum. In here, as you can see, it's a pretty different picture. We've been failing right into a resistant trend line, so not that great. We'll see about that. It's not that this is the end. Once again, I see so many people thinking that this will obviously fall again. That will fall once again because of that trend line. I mean, oh shitheads. Can't you see the 3 steps? There's one rule in trading. You follow the trend unless it's been pulling 3 times back to supports. And this is exactly what we've done. You can see the first sets of waves. I mean, if you can't see 3 dynamics in here, then we have a problem, okay? There's definitely 3 dynamics. Okay, so it's the first bearish one, crashing wave, the hope phase, then the crash itself goes lower with low volume, and volume lowering, amplitude lowering. Then you've got the desert crossing phase, which I thought was a buy entry, and once again, I have no problem with that. I stand for what I said. It could have been a good candidate back then. It happened not to be in the end, but that's how it is. We rejected another set of waves, and there are 3 waves. We need to have those waves to slow the fuck down. This is exactly what we've done. Fast, slower, and definitely is in here. So fast, slower, and even slower in here. So if you want to be selling, if you want to sell that, then that's your problem. I'm not saying we can go lower just a bit and try to break down the 3000s. We could do that. We could do such thing. But we're having higher lows, and that's what concerns me, because we built this trend line. We've been rejecting exactly there. And I mean, future will tell, but I still tend to believe that this is just once again for dumps to talk about and just to make people fear like usual. I mean, you see that very ugly, nasty, bearish candle, and you say, oh no, it's not gonna do that again, please don't fall apart. Alright, so now in a volume perspective, I'm just having a look at the bitstamp, so it's not necessarily the actual trading volume. So yes, let's do it straightforward. I'm going to do Bitcoin index. Bitcoin index, how the hell did they name that? BTCT? BTC dominance, what the fuck is that? Maybe this is it. No, this isn't. God damn it. Alright. I'm gonna let it go. Oh, yes, this one, this is. Alright. So, what about the volumes we had? Oh, that's a bit of a concern. I was expecting to have the opposite, quite like having burst of volume in here and slower volume, spiking volume as well, but slower volume. But anyway, what we have in here really should get you a concern, because either eventually we're going to fail again in Bitcoins, but it doesn't really fit the plan. Because what you should really notice in here is not just the price in here, it's just more likely the price to volume dynamic. And if you just have a look at that, okay, we're clearly seeing that the volume, God damn it, what the fuck are they doing? I mean, you see how tiny the volume is in here? I mean, it really is compiled in a very dangerous way. So let's use the daily volume in here instead, and you can clearly see the sets of waves. Okay, first sets of bearish wave, lots of volume is pouring out, and then we're pulling back to gather a lot of steam to go bearish again. Okay, it's really selling, aggressive sellers, dead cat bounce, hope phase, destroy value phase, desert crossing, but not necessarily the good one. I was ready to buy back then, and I have no problem with that. Didn't work out. And final push, kind of capitulation. And as you can see now, volume is pouring in, and this is pretty much different. Now we're rising, and we have a rising volume as well. So this is not the kind of structure that goes bearish, at least in terms of odds. To me, it's just people are getting back in. Doesn't mean we can just try to fuck them by going there rapidly. I mean, just a few candles, we go there in a week, and just 2 weeks from now we could be there again. So I would say, once again, don't put stop losses unless you're speculating on short-term trading, like Ethereum scenario. If you do something like that, then definitely if we go down, you have to get the hell out, because you don't know and you cannot speculate not knowing. But for the buy and holds, I mean, really, why do you even give a fuck? You should really let it go and wait for this to terminate its game. Alright, that aside, so SPX, my baby boy, come here. So is what we have in terms of price action. Very nasty reversal in here. I told you about that huge cluster of information, 76% fib. The area highlighted by the Fibonacci fan as well. So kind of a Fibonacci end time duplicate, and all those areas we've been highlighting. I said 4-hour chart signals, I'm in. I just took that trade, no problem with that. I just followed the strategy. Okay, overbought cluster in a context, overcoming the context actually. Red triangle, god damn it, if you didn't take that trade, I don't know what I can do for you, but this is definitely the kind of trades I wanted to take. So I'm in. That's the final stage, the final trade I'm taking. And just as a reminder, first trend trade in here, total failure. Second trade in here, trying to trade an excess out of the previous top, failed as well, but this one got managed, so I didn't manage to take a huge loss in here, just a tiny loss basically, because of this, because I sold, and partial profit take, taken down by Powell. Sold again, partially profit taken, partially loss taken. Remember, I took 50% off the table to be able to sell again at higher prices. This is exactly what I've done. Yesterday on this final area, the daily signal is an overload cluster, and I mean, if this isn't overloading a momentum, I don't fucking know what the hell this is. We have early signs of trending activity to come, and just as usual, remember, if we do trade in a bearish range, in a bearish trending range, then what we have is also reflecting this in terms of signals. We do have trend signals that got invalidated, but still, this is still hidden divergent, which means we've been going as high as we could have been in terms of momentum, and prices have failed so far. So what we're doing is exactly showing signs of trends, but we're first invalidating. We're invalidating the first aggressive signs and early signs of trend, but we're still failing to install bullishness. So we are installing early signs of, we're installing bearishness, we're degrading, and we're fucking up every early signs of trending reactivation, and we're pulling back to resistance, we're pulling back to context, but we never ever broken the resistances. So no bearish breakdown, no bearish break up, but pretty damn deep retracement. That's all we do, and it's definitely fitting the range context, the bearish range context. So we'll see how it plays out in the next few days. Today is obviously a binary day, and I remind you that we're going to have a huge catalyst today. We're going to have the IPC. No, what the hell are we going to have today? What the fuck is that? That's not what I thought we'd have. Normally we're supposed to, it's just housings. Alright, I thought we had another set of catalysts. Alright. Oh no, it's tomorrow that we're going to have the durable gold orders. No, we should have consumers' confidence. What the fuck is that? Let me just double check this. Yeah, TradingView is messing with that because we're gonna have consumers' confidence today, and it's definitely what matters. Oh, there it is, consumers' confidence. God damn it. Okay, sorry about that. So consumers' confidence is going to be a good, a huge number. Building permits as well. So if we do fail on those catalysts, you can be damn sure of bearish days along the way. What we've done so far is obviously breaking it down by the Asian session. So we broke down the previous day's highs, and we're just gonna try to levitate in between, and we'll see what Wall Street does. If we just fail, we have that ugly kind of wedge structure, ending diagonal. So it really is a mature structure, but you know how the USs are. They might be trying to fight back one more time, try it out, and if it fails another day, and if we do fail 2 days in a row, definitely then they're gonna capitulate and finally let go with the stop hunting. But for now, I wouldn't be surprised to have another try, another attempt to go higher today. Obviously, if we just surrender straight line, it's even stronger. I mean, we have the opportunity to try again. If we just don't, that means we absolutely have no more buyers, and that would be a pretty damn good sign to me. So patience is still required in here. We've got catalyst, and neither you or I do know what the actual number will be, how the market will get to interpret this. So you just let it go and play the bigger picture in between. And to me, that bigger picture, yes, it's bearish. Yes, it's been a long fucking time. But if you don't know patience, you're going to have to learn it the hard way if you want to get to trading. Alright, that's it for today. Basically no big changes on the account. I've been stopped on USD/JPY, god damn it. I knew it was a trap, but I couldn't change the order back in, I didn't have the time to change this order. I took a selling entry in here with a stop loss there, and obviously the market took me down. Just stop hunting as usual. So we go there, trigger the stops, no one else is buying. We go there, no one else is selling. So it's just we're oscillating until we get to trigger something to trade. But that was at some point I just said, okay, you know what, I see this coming. Because we tried to install this trend line, and oh god damn it, obviously we did break it down, we did break it up, so it doesn't necessarily change as the plan. It's just, alright, good job, wow. Okay, so this is what we have. It was absolutely stupid for me to just trigger my stop losses in here, but I put the stop loss on the market books, and definitely was a mistake. I forgot to put the alert to just assess that in real time, and definitely I ended up stopped. So I'll take the trade again, definitely will, but I need to have the breakdown to occur this time. So I'm going to trade whenever we'll get back to the trend channel in here and breaking it down, and not until then. So the yen is reinforcing today, as I said, just having a look at the usual cluster. We do have retail traders buying more than ever. We're now more likely 7 to 8% from the previous top, as we're still trading below the previous broad market top. Volatility is still rising, and we might have finally found that damn bottom. We can clearly see something has happened yesterday in terms of daily candle closes. So far so good. Junk bonds still haven't broken a single resistance neither. So we got retail traders buying, not even knowing what the hell they're jumping in. And if you see this volume buying and this volume not following, what does that mean? I'm just gonna let you think about that for a second. What does that mean? If they are buying like hell, they never ever bought before, but the prices doesn't follow through, it means somebody's selling in front of them. It's simple as that. They are buying like crazy shit, but the prices doesn't follow. It's a buying to selling balance. What you have in here, the black line, is definitely this. It's the buying pressure versus the selling pressure, and it's just the equilibrium between those two. And as you can see, we've got a huge buying pressure from unexperimented traders. And on the opposite side, we have something pushing back the opposite direction, and definitely might be the investors, the smart money, who's just basically, I think, just asking out. They're selling to whoever the fuck is ready to buy. And we do have a strong psychological pattern to trigger in here, because if noobs are buying when professionals are selling, you know how it ends. And we still have a bullish bias, which means prices are rising mostly because of retail traders. That's what this oscillator means. The zero value is in here. It means prices are rising because of, let's say the ETF volume is outperforming the broad market performance. So those who are buying this market are mostly retail traders. You do whatever you want with that information. I myself know what to do with that. I'm just keep on maintaining my scenario of selling until I get to take their losses. All right, that being said, I'm not going to say it all over again. That's all I can tell. So probably a yen reinforcement to come, as I had pretty decent signals on the yen this time. It was the plan. God damn it, sorry about that. All right, so it was the plan, remember, to have the yen eventually going to 90. We did that. So now we're back to 90 with a very exhausted trend, 1, 2, 3, 4, 5 waves. On an ABC correction, we're back to support, Fibonacci. We're trying to break through context. We got everything we need to just buy that shit out. And moreover, we've got a profit-taking signal. And there's a divergence also, so it's a tiny, but still a divergence. So I would say next up is to make a high on momentum. That will probably follow through with prices. So yen seems to be bullish, reason why I'm pretty fucked up being stopped with the USD GPY. I don't really get that, but that's how it is. It's still problematic for AUDNZD. So far, I just wait for this to play its game. It's still playing the same distortion between Australia and New Zealand, but I think at some point this thing will just normalize, and it will create probably a 10 to 20% move out of this cross. That's it. So that's all about today. Bye, guys. See you tomorrow.